There's been interesting discussion. We've heard systemic. We've heard, I'd like to put in existential along with it, what the threat is currently. I want to give you a few givens. I come from the world of finance. This place, not hardly anyone's had Finance 101 or understands macroeconomics, and I think the proof is in the pudding. Dr. Leeper's talked about a little bit of that. So in 2000, that's when Bush took office, we were $5 trillion in debt. So cumulative debt up to that point, $5 trillion. Put 2 wars on the credit card, we're at $10 trillion. Obama comes in. So from there to 2016, we added $6 trillion more. We're at 2006 at $16 trillion in 2016. You had CARES and COVID and structural trillion-dollar deficits annually. So we're about 26 to 27 at the end of the Trump years, but never now have we been at the level of where our deficits are close to 5 to 6% of our GDP, outside of a reason that would have driven it there. World War II, savers, investors, we paid it off. Now we're consumers and spenders by nature, and this is the worst place of all that. Haven't done a budget in over 20 years, okay? We've tried to do it in fits and spurts where you've had some discipline in there. We unravel it almost as soon as we do it. Biden has put us out there with a budget, the only place it's publicly out there, $42 trillion in debt in 5 years, $52 trillion in 10 years. Now, I want to go to Mr. Doe. What is more of an existential threat? 10 to 20 years where climate might drive up interest rates, which you just told Senator Kennedy, or the behavior of this institution that I think you can extrapolate very easily what's going to be the driver of interest rates. What do you fear more? Which is more inexorable? Which is more kind of hypothetical?
There's no question you've touched on a key issue in terms of the federal deficit and the borrowing that's placed a great deal of risk on the entire U.S. economy, if not the globe. I think the one thing I will say about the municipal bond market is that it's been interesting that over the last 20 years, the average issuance has remained steady at $400 billion. I think it's a real credit to state and local governments that even though they've had the borrowing capability, that they've shown some restraint. But to come back to your point is, I don't disagree with you.
You feel more comfortable really with state and localities to probably navigate through whatever we do invest in infrastructure as opposed to this place that will be borrowed from our kids and grandkids.
I do.
That's good to know. The other thing, when you look at the reality of this place, you go back over 50 years, we've never been able to tease out more than about 17.5% in federal revenues of our GDP. I said earlier that's now up to a deficit of 5 to 6% since we've had Bidenomics. I want to ask Dr. Leeper this question. When it comes to the arithmetic, we know that the climate issue is somewhat a bird in the bush in terms of what the financial cost is going to be. Mr. Doe has just said that. How quantifiable is it in terms of this current trajectory of borrowing and spending, the modern monetary theory? Where does that take our country, future generations at this current pace?
Thank you very much for the question. One thing I would like to say is that these trajectories that, say, the Congressional Budget Office regularly produces with exponentially growing debt as a share of GDP are things that can't happen. And the reason they can't happen is because people are not going to be willing to absorb all of that debt. The price of that debt is going to get driven down, just as has been discussed about munis. Interest rates are going to take off. Inflation is going to take off.
So we'll be saddled with almost an unbearable interest cost along the way, driven by the behavior and actions of the federal government,
Exactly.
in a nutshell.
Yes.
And I think that's why it begs the question in this committee, the Budget Committee, shouldn't we be attending to that? And I can tell you in the 5 years I've been here, Chairman Enzi, who was a CPA from Wyoming, attempted to do some of this discussion. It was too uncomfortable. You didn't do it. And I've just cited, I think the last balanced budget was with the Clinton administration and Newt Gingrich back in the late 90s. The easiest thing, the chip shot for this place ought to be to just do a budget, quit borrowing from our kids and grandkids, and all of this gets mitigated whether you're dealing with climate or any other issue that might confront the federal government. And it sounds like everyone is more comfortable with actually more action being done by the states where there's responsibility, where there is budgeting, than there would be with this outfit. Everybody there, would you raise your hand if you think that makes sense? 3 out of 5 is not bad. Thank you.